All right, today on the show, Derek, we are going to talk about product shortages. Is there a way to invest in that? Also, we want to look at the sectors that are leading so far in the market, and also look at where we're at right now. We're in June. It is the halfway point roughly. And let's go back and look at our predictions, our bold predictions from 2021 or for 2021. And let's see how right or wrong we were with those predictions.
Sounds good. If you guys like the podcast, like, share, and subscribe wherever you get your podcasts. Follow us on YouTube at Crosby Advisory Group. Follow us on Instagram at Dynamic Growth Pod and at Crosby Advisory Group. And Nate, let's get into it.
Derek, it seems that no matter who you talk to, what business you're talking to, it seems there's a product shortage in almost everything. My wife, we're like the rest of America, we're putting some money into our home right now and taking advantage of the time before the summer here and getting some things ready for our home. And we're repainting the house, at least a couple rooms inside the house. And Lindsay went to Sherwin-Williams and she asked for a gallon of paint. And they said, I can't sell you a gallon of paint. And she's like, why not? Because I'm a woman? No, it's not.
Yeah.
Because unless she's a contractor, they were not offering gallons of paint. They would sell her as many quarts of paint as she wanted to buy, but they wouldn't sell her any gallons of paint.
That's so crazy. I've never heard of it. That's insane.
So there's a paint shortage.
Have you ever seen the meme? It's like, shut up and take my money.
Yeah.
Yeah, that's literally what's going on at Sherwin-Williams. Come on, Sherwin-Williams, get your stuff together.
Right. I don't know how much the guy in the shop knew, but he said actually the blockage of the Suez Canal, he said, was a part of the reason why they were having trouble getting paint. Even to this day, everything got clogged up and backed up. So I don't know if that's the materials or if it's being made somewhere else and shipped to the United States, but that was the reason that he cited.
Yeah, it's insane. It's pretty crazy. So, I was back in Orville for the past 2 weeks, and I went to Walmart, and Walmart is horrible by itself. Like, to go and shop at Walmart is the worst. But it literally seemed like that place got hit by a bomb. Like, everyone just was like, kind of like, just drudging forward, and then the shelves were like half empty. It was really bizarre because I mean that's the closest thing I could describe it to is like literally it got hit by a bomb. Like I hadn't been to Walmart in a while, but that was pretty rough. I won't be back in a while.
I always tell myself every time I leave that, and not because they don't have what I'm looking for, but when I get what I'm looking for, do you know what drives me crazy? Is they have literally like 30 checkout lines, and they'll have 2 open. And they'll have a line, a mile long, those 2 that's open. And then they have the self-checkouts. But I don't know if this ever happens to you. Whenever I go to the self-checkout, something always goes wrong with the scanner. And then I've got that blinking light. Hey, this guy needs assistance. And it's like 5 minutes before somebody comes and gets you. And like, oh.
And then all they do is just like, beep. And then you're good.
Yeah. I mean, all right. They walk away and it happens again. My blinking light's going on again.
Yeah.
So, but
I mean, we did a podcast like 2 weeks ago about automation and stuff. I mean, why, if they can perfect that system, why pay somebody, if you can just check out on your own? It's
right.
Just another example. We didn't talk about self-checkouts though, but that's been a thing for a while now,
Well, look at Home Depot. The next time you go into Home Depot, it's the same situation. They'll have like 2 aisles that have people, and one of them is usually the contractor aisle, and the rest of them are all self-checkout lines.
Yeah.
But they have...
It was bizarre. Sorry, go ahead.
I'll say that they've kind of perfected it a little bit, at least more than Walmart has, because I don't seem to have any problem at the Home Depot line.
Yeah, Walmart, like at least the one in Worcester was, it was because I haven't been there in a while. It was mostly, like at least the time I was there previously, it was still mostly like checkouts, like you had to go check out with the person. But now, like you said, all of them, like it's 80% of them are just self checkouts. It was
right.
Pretty weird, yeah. It was really weird.
Well, let me go over the list of things here that I got this from MarketWatch, and I also got it from Forbes. They were talking about some of the items here that people are having a hard time getting. One of them is chlorine, which to me makes some sense because when COVID hit, everybody tried to buy a pool. Now summer's opening up, and there's actually a chlorine shortage out there.
I didn't know that. I didn't know people were buying pools.
Yeah, people. Well, I'm one of them. I bought a pool during the COVID shutdown. It's not going to be installed until any week now.
Is it in ground or above ground?
It's above ground. I'm building a deck around it. It's above ground because I know I'm going to tear it down here in about 10 years when my daughters are done using it.
Didn't you say you already had a pool and then you like took an axe to it? Yeah,
I did.
Yeah. Tell that story.
I was, well, I was a new parent at the time. We had moved into our house, and the house had a pool with it, and I had never had a pool before, so I had a very young daughter at the time, and I would have nightmares of her getting injured or drowning in that pool. So I woke up one morning and I was like, "Yeah, this is the last one." So I went out and I tried to do it like a normal person would. I tried to find screws that I could unscrew, and I couldn't find that. So I literally took an axe and just crushed it open.
Was that really satisfying?
It was actually very satisfying.
I feel like that'd be really cool. That'd be really fun. I'm
And then I
surprised you
went
didn't
to-
shoot it. Shooting it would be pretty cool too.
You know what would have been a smarter idea?
Hmm. What?
Sell it. People would buy
Sell
that.
it? Really?
If you put it, if you put it on, for example, we're getting our pool installed. Where the pool sits now is a trampoline. We have to move the trampoline. The only place I have to move it is where my kids' playground was before. They had one of those big wooden playground sets.
Yeah,
And so-
I know what you're talking about.
Lindsay put it up on Marketplace, and she said, $180, and you take it down and haul it away. And we were getting calls like crazy for people to do that. You
So
could
yeah,
do the same
pool
thing
would
with a
probably be
pool.
a hot item. Yeah,
Yeah, pool would be a hot item.
yeah. If
Gasoline?
you put some chlorine with it, right?
Right.
You have to
Ours is
sell it
a
with
saltwater
chlorine.
pool.
Oh, that's cool.
I'm not
Is
sure
that-
how that's going to work.
Is that good or bad? I don't even know. I don't know
I have no
anything
idea.
about pools. Okay.
It's supposed to be less maintenance.
Oh, that's cool.
Yeah.
That's always good.
We'll see though. But gasoline is on the rise, and in some places, gasoline they're actually having shortages in gasoline. They're having shortages. This is the funny story on cars, and so that's affecting both car sales, and it's affecting rental cars as well. I saw that
And
firsthand when
used
and used cars, right?
Yeah, used cars. Yeah.
When my family and I went to Florida a month or so ago, we were having trouble getting a rental car, and we had to rent this giant Expedition or something like that. That was crazy cost. The girl at our Willoughby office, lady at our Willoughby office, Lori, had gone down like 2 months earlier, and they rented a car for something ridiculous. Like ended up being like $150 for the entire week, and I think our bill for a week's time was about $1,500.
Jeez!
quite a
Ouch!
different-
Oh my
yeah.
gosh, that's rough. Yeah,
Yeah.
we go to the beach every year, or give or take every year. But we rented one of those cars. Yeah, and I don't think it was $1,500. That's crazy. But we're not renting a car this time, and I wonder if that probably had something to do with it.
Yeah.
You know.
Yeah, no. When he gave me my bill, I said, "No, I only had it a week." And he's like, "Yeah, $1,500." Like,
He's like, "No, I'm not buying the car." It's like I'm just renting it.
Here's another funny one. Oh, so let me get back to that. So I've got a buddy who is a car salesman, and I was telling him about that rental car, and he's like, "Yeah, you won't believe it." He's like, "People will come, and they'll say, I'm looking for a black Ford Explorer." And he's like, "Well, we don't have one here, but we do have a blue Ford Escape." He's like, "I'll take it," because people are buying cars that they don't actually even want just because they need a new car, and the inventory is so messed up right now that they're taking what they can get.
Hey, do you want to start a business right now?
Is it car sales?
No, it's Airbnb, but for cars. Like you can rent out your car.
I think there actually is in like some of like Chicago and places like that. There are places where you can rent your vehicle out
That's a good idea. That's a really good
Oh.
idea. Because
until
you could
they
just
return
like,
it.
yeah. Well, yeah. I mean, it's the same thing with Airbnb though. If they trash your house, there's safeguards and stuff. But I think that's a good idea because think about like passive income you can get. You could just get a clunker and then rent it out, and you'd probably make your money back in like a year or something. I don't know the exact numbers, but that's a pretty good idea, I think.
Yeah, just don't tell your insurance company that you're renting your car out.
yeah, right. Don't tell our insurance people.
Do you know
If
what else?
If you have Geico or something, go ahead. I don't care.
Do you know what else is chicken wings? There's a shortage on chicken wings right now.
I think I did see that. Another one was cereal. That was weird.
Yeah.
The cereal shortage. Yeah.
The thing on chicken wings is that I was trying to figure out what's the shortage on chickens. Apparently that winter in Texas messed a lot of things up.
Oh, really?
Where they had that
I would never guess
freeze
that's
go
why.
through.
Yeah.
I'd never guessed that either.
Yeah, that's crazy.
Yeah.
Is there a lot of chickens in Texas?
I don't know. Apparently
I guess
there
so.
are.
I guess so.
Apparently there are. At least
Yeah.
some chicken factories. I'm not sure. But so with the car inventory, a lot of that too is also the chip shortage.
Yes. Yeah.
Because as we talked in one of the podcasts prior, a car nowadays, a new car is basically a walking or a mobile computer.
Mm-hmm.
And so and even not that you've got the car companies, but even like I was reading an article on Apple. Apple has shifted to essentially making most of their chips right now, that they do it themselves. And even Apple, who makes their own chips, was having trouble getting the pieces and parts that go together to make those chips. So even they were having some supply chain issues.
So have they started like manufacturing the chips? Because I know that they design their own chips, like the M1, is that what it's called? That was like a big deal when they came out with that because it was designed in-house. But are they now manufacturing the chips themselves?
I could be wrong on this. I believe they are.
That's crazy. Because
Yeah.
one of my, I want to talk about the chip shortage too, and I had written down that Taiwan Semiconductor manufactured their chips, but I guess now they don't, so that's wrong.
Well, I think Taiwan Semiconductor is still a good play for that. I think, I mean, semiconductors and chips right now. I mean, you and I both like NVIDIA, AMC. Right. I mean, these are
AMD.
AMD. AMD.
Yeah.
No, not AMC.
Not AMC. Yeah.
We both like AMD. We both like NVIDIA. I think those are a company that you could buy, and just for the foreseeable future, I mean, just know that they're in high demand. Their products are in high demand.
It's like it's a double-edged sword with NVIDIA because they just had, I mean, go figure, another blowout quarter, and then they have been on a tear, like 3% a day for the past couple of days. Well, we're recording on Sunday now, but like Wednesday, Thursday, Friday, it was up like 3% per day, and like it's almost like, what do? Do you buy it like when at record highs, or do you wait for a correction? You know, I mean, at the position that I'm in, it's like I've accumulated like quite a few shares, so it doesn't really matter at this point. Like my cost basis isn't, or the average price isn't really moved by depending on where I buy it, unless I drop like a couple $1,000 in it. So
you and I were talking last week, and there were two stocks that you brought up that you said you sold, and you kind of kicked yourself for selling. What were those two stocks? Do you remember?
Uber and Moderna. Moderna was the other one.
Yeah. So and I think we're both kind of at this point. I try to think about the last time I sold a stock in my personal portfolio, and I can't remember when that was. So for me personally, for the most part, I buy a company and I plan to hold them for life, unless something changes in the thesis for owning it.
Right.
And then I would sell it at that point in time. But so getting back to your, AMD, is now a good time to buy it or not? For me, I wouldn't be concerned about that because I would plan on holding it for decades.
AMD, I think, is actually a good buy right now because it's been flat. Like it's in the same circumstances they make. It's pretty comparable to NVIDIA, and they've been flat for quite a bit now. Ever since I started buying it, it's been pretty flat. So I don't know what it's trading at right now valuation wise, but I would imagine it's probably a pretty good buy before earnings. Again, I don't know when they report earnings either.
I found it funny you mentioned Uber, that a lot of businesses out there are having problems with their labor force, trying to find workers. Mm-hmm. And the article stated that Uber was having the same problem. Uber's having a hard time finding drivers to drive. And
that's
so,
interesting, yeah.
Yeah, it doesn't escape a company like Uber as well.
So, sorry, go ahead. You can
I would say truck drivers are another. Trucking companies are having a hard time finding truckers to drive the stuff. So all this, when you look at this from a big picture, you've got bottlenecks, you've got labor issues, and with that, as we've talked about in the past couple of episodes, we've got inflation, right? We've got the cost of everything going up. An economist, or the old adage is, if you look out the window to your shop, and if there's too long of a line, that might mean that your prices are too cheap.
Right.
And so some of these companies have taken advantage of that with the demand for all their product by raising their prices. We've seen that with timber. We've seen that with gasoline, chicken wings, all down the line. So as an investor, is there places we could go, or how do we make that play?
So like long-term shortages are actually paradoxical in economics because, like you said, any sort of shortage in the short term should be corrected by a raise in price, and it's actually the same for labor shortages. So you'll hear a lot of times, especially now, like this wave of inflation is transitory, meaning it's not here for the long term, because they expect. I guess that their reasoning is that a lot of this inflation is being driven by these shortages, and once these shortages are corrected, then inflation will kind of taper off. But I mean, that doesn't account for like the demand push inflation that's being driven by all the stimulus and everything. So, I mean, in my opinion, I think it's a little bit of both. But I mean, I guess you can't really, without doing like a huge macroeconomic study that would probably take thousands of dollars to run.
Hmm.
You can't really assign blame to whether it's the shortages or the stimulus. It's only time will tell. So, but to answer your question about how to invest for it, I do think one of the best ways remains to invest in chip makers. That's one that I had because even with shortages, it's likely that, or like with the shortages, it's likely that you'll see some legislation to spur on manufacturing here in the United States, as opposed to, I had a number, 43 of global semiconductor production comes from Taiwan and South Korea, and then just like we saw with the PPE, the personal protective equipment for COVID, all of that stuff was made in China, and that was a real problem here in the United States. So we jacked up production of all that stuff here domestically, and I imagine something similar is going to happen for the semiconductors, because they become so essential to literally every business, and have caused there's been huge macroeconomic consequences from the fact that we don't make them here. So I imagine that there's going to be a big push. Well, if the government, or if the federal government has their head screwed on correctly, this is a problem that needs to be addressed, and I feel like they will.
Yeah. I've got two ways to play this, three ways. One is less long-term, and that would be just owning the commodities, owning these things that are going up in price. And we do that. I've mentioned it multiple times. We do that through a commodities index that we have in our models. One, if I'm in individual stocks, I think this year has proved to be an excellent chance for a picker. And what I mean by that is, instead of going all in on your portfolio, I've been having success just holding cash back. And then it seems like all these fantastic companies that were trading at such high multiples, they've been having trouble gaining their footing. Mm-hmm. And you're seeing a lot of them bob within kind of a range here for a period of time. And if you follow companies, and I would actually recommend that. If you're an investor, Derek, you and I have a watch list of companies that we watch. And we become very intimate with these companies because we follow their earnings calls, we know their products, we know what their challenges are, what their risks are, what we believe is going to drive them going into the future. And so with that, you get a comfort level. And when you see something that begins to fall, a stock off the top of my head that has had trouble gaining its footing is Microsoft.
Mm-hmm. Microsoft Adobe is another really good example.
Adobe is another one, good one on that, great one on that. And then when you see them stumble, and you know that they're a fantastic company, now is your chance to pick some up. And you don't have to go all in, but pick some shares up. And then they rise, and if they stumble again, pick some shares up. We just did that with Abbott Labs. Abbott Labs dropped 8% in one day.
Good example, yeah.
Yeah, and it was trading roughly, I think, 119, and it dropped down to 106 or 107.
Yeah, it just got slaughtered for just one. Well, there were issues with the long-term prospects because of us exiting the COVID era, where they would have some or they wouldn't be as strong. But I think Abbott Labs have established themselves over the long term that I don't think that there's much to be worried about if you hold it long term.
No, I agree. So, and the market seemed to understand that because it dropped down to 106. We picked a couple of shares up. It went up to 107. It went up to 108. And we were picking up shares along the way because high confidence in that company that it's going to be a solid company for years to come. And just like you said, its prospects, while it benefited, no doubt, from the COVID outbreak, its prospects are not surely dependent on COVID-19.
Yeah, 100%. And I think, if you're really if you're a novice at investing, I think one of the best images to have in your head is the idea that, I think, is this a Warren Buffett quote where it's in the short term, the market's a voting machine, and long term, it's a weighing machine, because a lot of the day-to-day price fluctuation is driven by hedge funds, institutional traders. They're just trying to protect a very short time horizon. They're trying to protect their month or their quarter. But it's the business we're in is retirement. So we're looking 20, 30 years down the road. And it's these are some of the best opportunities. I think you made a really good point there, because it's if you can pick it up for 10% cheaper, but the fundamentals of the company hasn't changed, it just went on it just went on sale 10%.
Yeah. That was actually a Ben Graham quote. But,
I apologize. Sorry, Ben Graham.
Yeah, but Warren Buffett is a value investor, so that's perfect for him.
Yeah.
The other way that I think you can invest is, we try to, when we pick individual stocks, we're in individual companies that we believe have prospects to outpace the market long term. I probably would not be in an individual stock if I believed it was going to trail the market long term. Why would I do that? But the other thing you can do is kind of swim with the current. And what I'm talking about is you look at the present situation, and we've made some changes to our models that looking at now seem to be very, very positive for us. Mm-hmm. And that was that we added the financial sector to our models. The financials have done very well. I think they're the second best performing sector in the market. We've added energy, which was the number one performing sector in the market. We've added, the other thing that I've begun to add is materials. And one of the companies that jumps out at me for materials is Nucor. Nucor is up roughly, it's over 100% for the year. But it would make sense, as the economy begins to gain steam, and especially since we're talking about potentially an infrastructure bill and some building going on and things like that, you would think that materials, because the market is a forward-looking thing, that materials would benefit from that. There's an aluminum shortage right now. And one of the companies out there that has been hit and miss throughout the years, that it hasn't been a great company to own, just set it and forget it. But as I look at it right now, Alcoa I think it has a multiple of like 8.74 right now. Its PE is 8.74. So with a shortage of aluminum, potentially is there an investment opportunity there? I would do some digging. But these are the kind of things that you want to ask yourself, looking forward, kind of skating to where that puck's going, not to where it is right now.
Sure. Yeah. Yeah. I mean, that's how a lot of people lose money is they'll, don't look at the shiny object. Like everyone wants to, I think Bitcoin's a good example, not to talk about Bitcoin every episode, but like, everybody wants Bitcoin when it's at 64,000, but when it's at 35,000, it's not, you can't get anybody to, I saw this one thing, the trading volume for Bitcoin actually hit zero for the time span of a minute. Like nobody was trading Bitcoin
really
for 1 minute. Isn't that crazy? Which is
that
like
is crazy.
That's like unheard of, because like think about a global asset, I guess, or whatever you want to call it. It's like it's such a dynamic market that no trading is going on for that long. It's pretty insane. Like that's unheard of for like a stock, even like a large cap stock.
It's about to get a big bump here because China trying to ban it, right?
Mm-hmm.
But El Salvador is getting ready to come out and say that they are going to use Bitcoin as legal tender.
Let's get a scale. It's like GDP of China versus the GDP of El Salvador. You know,
partially joking there.
The scale would literally disintegrate under the weight of China's GDP.
Yeah. So do you want to go ahead and get into our predictions of next year or of 2021?
Yeah, let's do it. Well, let's preface this with the year's not over. We were right in some places, wrong in some other places, but hopefully we end the year closer to 100%. Not 100%, but you know, we're doing pretty well. But you know, we can maybe make up some ground in some of our losers.
But there's a benefit to doing this, and that would be education. When you are wrong, and I was wrong on one of my predictions so far, when you're wrong, it's an educational opportunity to ask, why was I wrong? Mm-hmm. And maybe, I don't know, in both our cases here, we had ones that we were less right on, let's say. And so there's still time to make it up, but it's interesting to see, and I'm trying to break down why mine was wrong. And we just talked before the episode. I think we can maybe say the one that you had picked was at an elevated level. The thesis was there. The thinking was there on it. It just hasn't panned out yet.
Yeah, because of something that I didn't see coming, and then maybe if we're in a similar situation, you can capitalize on it instead of being correct, you know.
So let's get into it here. So I'm going to start with one of yours that you came out with, because I know that you were traveling here, so you didn't get a whole lot of time to do some preparation for this. So I'm going to give you some of the ones that you said here. But the first thing that you said for your bold prediction for 2021 was that at the time where we reported, we were doing the episode, which was sometime in January, I think, right?
It would have been, really early in January.
You said that you felt the market was overheated and that you would not be surprised if we would see a correction in the near future. And I always expect a correction every year at some point in time. But you were pretty darn close, because that couple of months later in March, we did face a correction where we had some sell-off. And the sell-off was so quick that some of our investors were calling saying, hey, should I be buying gold? Should I be moving to a defensive position? And No, in that instance, we just stay the course and we maintain our strategy. We don't make a rapid adjustment just for the correction.
Yeah, I mean, like we just said, like a correction is just pretty much a buying opportunity depending on the circumstances, unless it's like a fundamental shift, like something that happened in like 2008 or something like that.
Yep.
Yeah.
So Derek, you're 1 for 1.
Nice. Okay.
So my first thing that I don't want to say that I'm right on because I don't think the reasons for where they're at was because of my prediction, but I said that you should avoid investing in battleground stocks. We were just coming off a nasty presidential election, and we had the president of the United States that was banned from Twitter, and he was a lot of the apps out there. Amazon Web Services took the Parler app off their server, I guess if that's a word to use. Apple got rid of their app as well. And so I was mainly focused on Twitter. And I said, you don't necessarily want to invest in a battleground stock because there were a large percentage of people who were at that point in time, and remember, Americans have short attention spans. They were closing their Twitter accounts. The interesting thing, though, is that Twitter does not, they're global, right? So just because there are accounts that are being closed in the United States doesn't mean that Twitter's not growing as a stock. But Twitter has trailed the S&P 500 as far as its return. Twitter's probably not a stock that I would be a long-term investor in anyways.
Yeah.
That's just my feeling on it. But interesting enough, Apple and Amazon are both down for the year. If you would told me that would be the case in 2021, where the economy was opening up and continuing to grow, I would have thought that would be an odd situation. But the reason that those two are down, I don't believe have anything to do with being a battleground stocks. I think they're down because of their multiples.
Sure. I agree. Yeah, totally.
So we've seen that with a lot of companies that were high flying through 2020. Basically, anything that was a COVID stock or benefited from COVID has not got permission by the market to move forward a whole lot in 2021.
Yeah, and I think that it could be a different situation ending the year. I think that those could end up having solid years.
So here's your Oracle of Orville take that you had here from your bold prediction for 2021. You did some research and you went all the way back to 2008 and you looked at the sectors that had 2 consecutive years of underperforming. And you had said that the financial industry had done it in 2008 and 2009, and then you said the energy sector had done it. But the energy sector had underperformed for the 2 previous years. And you said that it was highly unlikely, in your opinion, that the energy sector would continue to underperform in 2021. And not only were you right, but the energy sector has been the best performing sector through 2021. So nice job, Dirk.
Thanks. And then I didn't back it up with any muscle though, because I actually didn't buy the energy sector. So who cares if I'm right? If I just said it, I wish I would have bought, Yeah.
Well, we were so convinced, at least in the conviction, that we've added it to our investment models.
Sure. Yeah, we did do
for
that.
Clients.
Yeah.
My second bold prediction was that we would no longer need to be purely in growth in order to make a buck. For the past 10 years, if you look at the comparison of the NASDAQ versus the S&P 500, the NASDAQ is largely, at least the NASDAQ 100 is largely growth companies, heavily favored into tech. The NASDAQ has crushed it over that period of time. But now we are seeing a little bit of a shift here, and value has come back to favor. And so I was correct in that.
Yeah,
I said
you
that
knocked that one out of the park for sure.
Well, I said that didn't mean you want to sell your growth stocks. It just means that you no longer have to be in growth to make a buck, and it's actually been a much easier path if you've been in value in 2021.
But also, I think you're right on the second half of that as well, where you didn't want to sell your growth stocks because some of our tactical model names have performed well in 2020 or 2021 as well. So
yeah, and they seem to be gaining some footage, and I'll kind of get into that here because I'm going to get into the one where I was pretty wrong on so far. As these companies report earnings, and they're still having these solid earnings, even though they've got these high multiples.
Really good. Yeah, really good quarters.
It's only a matter of time before the market can ignore that.
Yeah, I agree. Like you can only take so much. Well, Zoom has its own issues, and I don't own Zoom. But I mean, when you have 191% year over year, was it revenue growth?
Revenue growth.
It's like I'm not saying it justifies like a 200% times earnings multiple or anything, but it's like after falling down 30% or whatever it did in March, it's like you have to give the devil his due, I guess, or whatever metaphor you want to use or whatever. But yeah, you can't treat that lightly if they have that much growth, and that's going into a scenario where we're getting out of COVID. I think that's pretty impressive. And then Apple's the same way. Amazon, like, just pick your name.
Yeah, solid earnings. And I had actually on the last podcast, I had said I was a little bit wary of Zoom because they were going to have comparables that were no longer, gimmies. They were comparing themselves to 2020 when they were roaring, right, and doing very well, and everybody was using Zoom, but they still managed to grow substantially, significantly.
And the shares were actually flat, like post earnings, yeah. And then you said DocuSign as well, which traded higher, that was a good call. That wasn't your 2021 prediction, but you made that prediction a couple weeks ago, or was that last week?
Did you see how much higher it jumped?
It was like 16% or something.
Yeah, it's crazy.
It's a big jump.
But DocuSign if anybody's ever used it, it's a fantastic product.
Yeah, but it's strange because that one has a pretty high multiple as well. You wouldn't have expected that post earnings.
Yeah.
So you would have expected that long term, but not post earnings.
Right. Yeah, because basically everybody, the market has basically yawned at everything that everybody's put forward, unless you're a value company, unless you've got a little bit of a lower PE.
Yeah, or Nvidia. Nvidia had a great quarter, and it sent them higher. But Nvidia and Salesforce, I would say, because for the past couple quarters, the market hasn't respected their quarters, even though they've been blowout quarters. And then, like you said, it's like it comes to the point where it's like, okay, it's like it shouldn't be trading lower than it was 3 months ago or 3 quarters ago when like the numbers just keep getting better and better and better. So you eventually have to start buying.
Yeah, I agree. When I said that you no longer have to be in growth, one of the things I said was I was looking at industrials, and part of the reason for that was a potential infrastructure spending bill coming due. So the two companies that I was looking at was Deere and Caterpillar. So far, year to date, Deere is up 32%, and Caterpillar has edged Deere out by about 2 percentage points, up 34% for the year.
Yeah, that's a good one. That's a good one.
This was your best one, though. This is the one I think even better than the energy sector.
I think so too. Because think about the environment that we were in. This was like this is because we had a pretty nasty correction in March, and then even in May, a lot of those high flying names, they really got slaughtered. So like now it looks obvious, but I just want to preface this where we were everybody was bullish, and then so go ahead. What did I call?
You came out and you angered Elon Musk, and you said that Tesla was going to underperform the S&P 500 in 2021.
That's why he's been so mean to my Bitcoin position. Because he listens to that podcast.
Yeah. Well, so yeah, Tesla has taken it in the rear mostly of all of 2021. And despite that, its PE is still, I just checked it before I got on here, its PE is still 600.
Oh, jeez. Yeah.
So in an environment where the market is punishing companies with high multiples, 600 is beyond high.
Yeah. And I think it deserves a premium. I think Tesla deserves a premium, especially if, because it's not just cars, it's the brain of Elon Musk, basically, and all the stuff he's doing with Boring Company and solar panels and all. It's all that stuff. So it deserves a high multiple, but yeah, 600 is still pretty stretched, even though I did buy it on the 30% correction. I have been purchasing Tesla to my downfall, I guess, because it keeps going down, but it's all good. Long term, I think that Tesla's a good one to own.
Yeah. I was told that you can tell an intelligent person a person who's willing to change their mind when new information is brought forward. And in the end of 2020, if you would have told me that I would be buying Ford and GM for clients' portfolios right now,
instead of Tesla,
I would have scratched my head. But GM has a multiple of roughly 10, and Ford has a multiple of roughly 14, and both of those stocks have done amazing jobs so far in 2021.
Mm-hmm. And then they even face headwinds with the chip shortage, just like everybody else. But I think it not just with growth names, it's the same with value names. If they you can't nothing's going to stay cheap for that long. People are going to start buying it, which is why I think is going on with Ford and GM. But yeah, I was even skeptical about your call about Ford and GM, but you were correct on that one.
There's a firm out there called Alex Partners, ALIX, and they estimated that the auto industry in 2021 is going to lose about $61 billion because of the chip shortage.
I believe that. I believe that 100%. Yeah.
So let's get to the ones where maybe we were, let's call it less right.
Yeah. Let's do good news before the bad news. I like that.
So I'll go with mine first. And this is to add salt to the wounds. This was my surefire bet. This was my can't miss. This is going to happen. Mail it in. Here's what it's going to happen. I said that cashless would continue to be king. And I said that MasterCard, Square, and PayPal would continue to outperform the S&P 500. And so far, through this first half of 2021, I'm not correct with that. MasterCard is up for the year. PayPal is up for the year. Square is down. And MasterCard and PayPal are not up by much for the year. So they're trailing pretty significantly so far this year. But don't sell. And here's why. We had just said that there's only so long that the market can ignore what you're doing. And all three of those companies have elevated multiples, Square especially. PayPal, in its last earnings call, PayPal beat earnings by $128 million. MasterCard beat earnings expectations by $163 million. Get this one. Square beat earnings expectation by $1.7 billion. Now, yeah, keep putting quarters up like that, and it's just a matter of time before it continues. So in my mind, cashless is still king. There's nothing has changed in that. The world's not going back to cash. If anything, we're running faster from cash.
Yeah.
Especially as the government's printing it, you're looking at people going into cryptocurrencies and finding other ways to hedge that bet. And I believe that the digital currency and the digital transactions will continue to climb.
Yeah. And then Venmo is offering cryptocurrency transactions. Cash App, that's Square. You've been able to do it for quite some time now. But then Jack Dorsey tweeted that he's trying to develop hardware wallets for Square customers, for crypto hardware wallets, where you can have your crypto, basically like they say you're not your keys, not your coin. That's what they say. Mm-hmm. So now you can have your keys with a Square wallet.
So will you be buying a hardware wallet?
So we talked about this. I think it's a good idea to probably have some of it on hardware, because that's the for a lot of the thesi, however you say that, of Bitcoin, where you want to protect it from the main perk is that it's decentralized. Nobody really controls it, and the best way to have, if you want to minimize other people's influence on your Bitcoin, you would do it on hardware. Because if it was with Cash App, let's say you have your Bitcoin on Cash App, and then all this regulation comes in on the people that facilitate transactions with Bitcoin, it's like you could have some of your position at stake if it's through Cash App or Coinbase or even BlockFi. That's the one we use. So I think maybe it, but at the same time, you don't want to put it all on hardware, because on BlockFi you can get interest on your crypto, and if you're not planning on spending your crypto, I think if you're not getting interest on it, I think that's foolish. If you can get a return on it, then I think you should.
Yeah, especially if you're using it as that hedge. I mean, you might as well get an interest whether it's declining or rising. Hopefully, long term it rises, but at least you're getting some sort of interest. And they pay that interest in the cryptocurrency. Well, I think you can opt into different options, but the way mine is set up is my interest is paid in whatever the cryptocurrency I'm holding.
Mm-hmm. Yeah, same. Yeah.
So your less right prediction for 2021 was, and your thesis for that, or your thinking on this, I think, was right on. You said with the current administration coming on, and this was the reason why I said industrials would do well. With the current administration coming on, the typical Democratic playbook is to infrastructure. Is they want to stimulate, they start spending in the economy, right? With the infrastructure, you thought that clean energy would be a good play, and also the current administration would favor clean energy as opposed to some of the fossil fuels that we've used in the past. So far, clean energy hasn't panned out for 2021. Any thoughts on that?
Yeah, it would take a huge shift in the clean energy space for me to make a prediction like that again, because historically those have just been terrible to own. Like the one ETF that we use was ICLN, and it's like the only problem, like it's good ideas, it's good technology, but those companies just don't make money. So unless there's a huge fundamental shift in the way we consume energy, I think that you'd be better off just buying like the XLE rather than specifying clean energy.
Yeah, but it was a good thought. I ate some crow too, so my cashless has definitely not been king so far. I have one more here that I actually was going to talk about. It wasn't a bold prediction, but I said that I would be disappointed if in 3 years, I can't remember what the time frame was, 3 or 5 years, that I was not an owner of Airbnb. And that opportunity has not passed me by because Airbnb is only up 2.68% for the year.
Mm-hmm. Yeah, I
still
think
think
that's a good one. I'm in the same boat. I haven't bought shares of Airbnb, but I think I like that one.
Yeah, I think the business model,
It's too clean.
It's too clean. It's too. I mean, the other thing that I would think about. So, Airbnb potentially, and I'm not telling you to go out and buy it, but if you believe in the great reopening, Airbnb might not be a bad play right now, with people out there traveling and going places, especially whenever we get some cross-border travel a little bit more frequently. I think Airbnb is set up to be a quality company that you can own for a long time.
I mean, yeah, all the travel that I'm looking to do is all Airbnb. I think the hotels are in trouble because I think Airbnb is a superior product. I was just talking about, like, if you're in a position, like, let's say you're retired, you could legitimately be in a position where you could just go to a city and live there for a month. Like, with hotels, that's not really possible because it's like you can't really live in a hotel for an extended period of time. But with Airbnb, you could legitimately just move to a city and live there for a month. I think that's attractive too. Not that specifically, but I think the possibilities with Airbnb are amazing. I think Airbnb is a great product.
So when we went to Pensacola, Florida, we stayed, we had an Airbnb, and it was in this condo, this giant condo that was 20 stories high. And because there was such a lack of travel, we were able to rent the penthouse, the very top. Did you ever see pictures of that I sent to you?
Yeah,
it was unbelievable.
It was awesome.
Like,
it was really cool.
I did not feel like here. We felt like the Beverly Hillbillies. Like I'm walking up with my 3 kids and they don't have any shoes on. But we got it for the same price as you would rent anything, somewhere else. So it was amazing.
It looked pretty sweet. Yeah.
Well, Derek, anything else to add before we head out into the week?
Nothing I can think of, but as always, thank you guys for listening to Dynamic Growth. If you like the podcast, like, share, and subscribe wherever you get your podcasts. Follow us on YouTube at Crosby Advisory Group. Follow us on Instagram and Facebook at Crosby Advisory Group and at Dynamic Growth Pod. And we will see you guys next week.
Please remember, Crosby Advisory is a registered investment advisor in the state of Ohio. At any time, you can request our forms ADV 2A and 2B, which go into the business practices and qualifications of Crosby Advisory. Today on the show, Derek and I mentioned specific securities. That is not a recommendation for you to go out and purchase them or sell them. Please do your own homework. Realize that investing involves risk, and you should carefully consider all risks and fees before making an investment. Crosby Advisory is also a licensed insurance advisor. Insurance products are sold and serviced through Crosby Advisory.
Sweet.
That was a quick.